this was going to be a news-heavy week, and we'll get into a little bit of that in a moment. My week aside from trading has been pretty good as well. We've had some lessons learned from sporting endeavours, right? Those football fans out there who saw the Liverpool PSG game will be able to make some analogies about their trading, I'm sure. I heard a famous natural gas trader a couple of weeks ago say that the aim of the game in natural gas trading is to stay in the game. And the secret with trading is to just never blow your account. And if you can do that every single day, then you can come back again the next day. And this is very much what Liverpool did in Paris. They managed to not blow the account somehow. Amazing stop losses from Alisson in goal. And then eventually when the opportunity came, bang, they struck. And yeah, they ended up with a positive week. So if you can do that sort of thing as a trader, there's a little bit of analogies there for just hanging in there, never doing too much damage, and when the opportunity comes, taking it. This is something to maybe try. So good week from me outside of trading. How about yourself? What have you been doing this week, Zee?
This week it's just been all crypto. There's just so much going on with Trump and his sort of crypto summit coming up tonight. And a few sort of Truth Social posts that he put out last Sunday.
He's back.
And he's back. He's impacting the Nasdaq. He's impacting the indices. He's impacting the bonds, and crypto especially with the summit coming up. So I'll be talking a little bit about crypto.
Excellent. Why don't you start us there? Let's have maybe a little look at what happened this weekend just gone. Obviously, we spoke to you last Friday. Over the weekend, before we even got back to our desks, things had already got going.
Yeah, so absolutely. So last Sunday, the 2nd of March, we had this Truth Social tweet, let's say, put out there. So he talked a little bit about crypto. He goes, and obviously BTC and Ethereum or other valuable cryptocurrencies will be the heart of the reserve, and also love Bitcoin and Ethereum. So he talked a little bit about sort of the crypto summit. He talked about an executive order that he's putting through where he's going to create a crypto strategic reserve in the treasury. It will involve XRP as a stable, Solana as the ecosystem token, and ADA as a research token. And he goes, I will make sure the US is the crypto capital of the world. And we say, when Trump tweets, it impacts the market.
Yeah, it really moves it. Just for those of you who aren't familiar with like FX reserves, all these central banks and treasuries, they have reserves of currencies, and Trump believes and is going to, judging by his tweets, add crypto to that holding of things like euros and yen and gold. Crypto has found its way in, and it impacted the market there.
It absolutely impacted the market. So we started off at a price of 86,575, and I was looking at the charts. Then Truth Social alert comes on my phone, and I quickly look at the chart. 5 minutes later, and we had 3 bullish candles. So we went all the way back to 94k, and that's the impact Trump has, Chris, and this is why we keep mentioning his name week in, week out.
Yeah, news moves markets, and this is, we talked about this from the beginning of this podcast series, really, that Trump in town is going to bring something very different to what we saw under Biden. He wasn't a man that moved markets. Powell was probably the most important man in finance when Biden was in charge. Now Trump has taken the mantle for sure. You've got to be aware of what he's doing. If you don't have a Truth Social account, you need to get on this in order to be aware of what's happening.
Absolutely, especially if you're a trader. In both assets, futures and crypto, you have to know what Trump is talking about. So here, that one sort of post on Truth Social took price from 86,000 up to 94k. And for the people that trade futures, I would not be trading it. I'd be holding it in sort of cash. And in futures, you can see. So could you explain, Chris, what happened here in sort of the futures contract here?
Absolutely, yeah. The CME futures, which is a more widely traded product now than it ever has been, really, I'm sure. But there are limitations with futures contracts. The CME, the Chicago Mercantile Exchange, the big futures exchange in the US, it works 5 days per week. Sadly, Bitcoin is 24/7, right? It doesn't stop for Christmas, New Year, or weekends, right? It just goes and goes and goes. So if you're trading Bitcoin on the futures market, you really need to be careful with what we talked about a lot already this series. Weekend risk, gap risk. They call this the CME gap. So this didn't capture that move from Trump on the Sunday. All you got was the print late Friday, and then wake up on Sunday. wake up on Monday morning for me, but this printed 11 o'clock Sunday night. You see that print higher and it's reflected in the price. If you had a stop loss and you were short going into that at 85,500, you were filled at 95,000, right? The stop is just an order to execute, an instruction to your broker to execute a market order. So please be aware, if you're trading with leverage, you're trading and expecting stops to work with this sort of thing, it will not work. And your ass will be handed to you.
Absolutely. So you got to be careful, especially trading futures. Now the other thing I have to cover is it's been, as I said, it's been an eventful week for Bitcoin and for crypto because Trump has been pretty active, not just with that tweet or that Truth Social post. He also announced a crypto summit taking place at the White House.
The White House, wow.
The White House, Chris. This is he's going viral with crypto, and so this was the article that I want to kind of tap into. So Trump's White House Crypto Summit. What's taken everyone's interest is the attendance sort of sheets, not just the owners of centralized exchanges, it's co-founders of ecosystems. Chris, so things like ADA Coin, Charles Hoskinson, the founder of ADA, is going to be there. Yokovenko, the founder of Solana, is going to be there, and USDC, the founder of USDC, Jeremy Alera, is going to be there. Vitalik Buterin from Ethereum is going to be there. So we have the whole Ethereum ecosystem, including CZ from Binance, covering the audience there. And then you have all these other attendees, sort of the CEO of Crypto.com, FalconX, Robinhood, Kraken, and Brian Armstrong from Coinbase. So we're going to see a bunch of movements tonight. And we kind of see that currently happen in Bitcoin. So if we look at the Bitcoin price currently, it did tap 91K at the news, and then it's sort of ranging from there, 91 to 88. So it's been eventful that way.
Yeah, what do you expect from this evening? I mean, are we going to get some more mad weekend risk, do you think, in this crypto? Do you think we'll wake up 5,000, 10,000 differently on Sunday night to when we go to sleep on Friday night?
Yeah, be very careful trading crypto because you're going to see big moves. You're going to see big moves because his comments are going to be executed on his Truth Social. The White House Summit will be live. And you're going to have these founders speak. I believe they're going to sort of speak a few words as well. So every time they speak, we know that sort of affects the market. Especially if Vitalik is on the White House Summit speaking about Ethereum's development. So yeah.
Oh, exciting times. Well, yeah, I'm not a crypto guy myself, a crypto bro. Brett, maybe if we get a 60% decline from highs, you might tempt me back in again. But yeah, this move has been quite something. So I know you've done fairly well in there. So well done. Yeah, so what else? You talked about the news briefly there, about what we also saw today. Maybe let's look back on today's news before we look back to what happened in Germany earlier on in the week, and take a look at what we called as being potentially one of the big news events for the week, or for the whole cycle, really. And it was to look at the non-farm payroll figures. This is the biggest event in economic or scheduled economic data releases that we ever get, right? It's about 50% more volatile than any other event historically, so we care. And interestingly, going into this, the Feb non-farm payrolls, 5 years in a row, seasonally this is a great month, it had been 5 years in a row better than expected. So we rock into the number today at 130, and we get it, okay, moderately worse than expected, but statistically worse than expected. But I guess the real red flag here was the unemployment rate crept up a bit from last time, and vis-a-vis the expectations. Expecting 4, got 4.1. So what's this going to tell? There's no real big moves on the average hourly earnings. They were revised down, to be fair, although that was a minute or two later. But the move had already happened in the S&P to that point. So let's scroll over to the ES contracts. I might move down into the lower time frames here. I think a 1 minute chart might be the best place to take a look. And we'll see what happened on this news at 1:30 today. Well, generally, bad news has been bad news for the stock market, right? And you could argue that this is bad news, slightly worse unemployment rate. I guess this isn't really bad news, right? This is kind of exactly as the market anticipated. And there was a bit of a tail risk in this particular jobs number. We saw, throughout the month that Doge has been, putting bullets in a lot of government employees' roles in the US. And these figures, I think they're only coming in really from the 12th, that it was really hitting home. So we might see these numbers more reflected when we get the next set of figures the following month. But there was a fear that we could get a pretty nasty number, and it was a tiny bit worse, but certainly not nasty. So when we're trading these figures, and what you're looking for as a news trader is you want to firstly have big news. That's helpful. It creates volatility. But with that, you also would like a big surprise, right? If you get a big news plus big surprise, this is where markets need to recalibrate. They need to move higher to account for those new changes in fundamentals, or they need to move lower again to account for them. And on this occasion, it was basically in line with expectations. So not expecting, this wasn't enough for me to trigger any trades, but it still creates volatility. Why is there volatility? Well, if you look at the order book right before these events come out, there's always kind of orders from institutions sat slightly higher, slightly lower, waiting to be traded against. Market makers are paid to create offers and bids in the market, and they have to do that. However, into news events, the majority of those orders get pulled. And effectively, there's just no liquidity to trade against. So if you click sell or you click buy, you're just going to be buying from the next seller in the market, selling to the next buyer in the market. This can be a world away from your current prices. And that's why you have this horrible wicky action. So anyone who was thinking, I'm going to go long on this figure, you might have thought, oh, great, the market rallied. Well, you probably got stopped on the tail. And if you were looking at going short because the news was bad, even though it was kind of in line, yeah, you got your fill, but then you were quickly wiped out of the market. I'm sure stops were not well filled by many brokers out there either. So please be careful when trading these news events. I would only suggest getting that cocktail of big news plus big surprise together. And if you don't get that, then you really don't want to be touching this stuff because you want to just wait for liquidity to kind of come in. One thing, I know we don't talk too much about the order flow, but I think you'll find this fairly interesting if we kind of toggle over to the NQs. This NASDAQ move, if we take a look at the order flow, this is showing the numbers of buyers and sellers in the house. And wow, it's already ran low. So let's see if we can get this on a 2-minute chart to kind of account for the data we had at 1 today. Here we go. So this move higher was met very, very rapidly with what we call trapped buyers. I'm going to have to squeeze in on this a little bit, so bear with me on my timing. But we had a huge amount of imbalance at the top here. So if I can squeeze this up and squeeze this along, this is a footprint chart. If you come on and work with us in here, this is the sort of thing you're going to learn, right? Understanding where the market orders are placed in the market. And at this point, we had quite a few buyers up at these highs, like trying to run into this momentum. Yet the market didn't get lifted by these buyers. In fact, there was very few sellers, and the market actually responded in the opposite direction from here. And this ended up being the high. And so far, I believe, the high for the day. If we look back to a 5-minute chart here, you'll see that we've seen very little indeed in terms of follow through to the upside. And I think certainly since I came back down here, we've seen a little bit more weakness in the markets too. Yeah, softening again. But this high that we had on the figures, these were trap buyers. These guys got squeezed out of the market. And when you get a number that is not a beat or a miss, it's going to drag liquidity on one side, drag them out of the other. And people, I'm sure, have been chewed up and spat back out by this market today. So when you get figures like this on Non-Farm Friday, sometimes it's worth maybe just calling it a weekend and taking yourself off to enjoy what looks like being a nice spring, at least so far. So, yeah, that's my thoughts on the news. What's your take on this, Z?
So my sort of take is, if I was to play the news, I would be trapped both in a long or a short. So if I was to long, my stop loss would be hit, and if I was able to short, I'd get wiped out. So you got to be really careful. And usually I let the sort of news play out first, and then I'll play the range out. So it prints sort of a range. Let's say on the NASDAQ, for example, I saw a range of about 200 points sort of played, and then from that 200 points, I find my levels. So I would have literally shorted it about 15 minutes on. I would have got 3 sort of confirmation candles. Obviously, see some trap buyers on the order flow. And
Yeah, we have them. Yeah.
And then see the short play out. So I would have played it out there and then been in and out really quickly. But I think you wait for the move. You don't play it at the market.
No, I agree. I mean, I certainly, on a news like we had today, which was not really clear in either direction, I guess it just gave you an opportunity to get into the short, really. But I hate it when a market moves in the opposite way to you would expect it. On bad news, the last couple of weeks, the markets have gone down. And albeit it wasn't particularly bad news and they went up, it always makes your head kind of question as to whether the narrative is kind of flipping back to the good news is bad news narrative we had towards the beginning of the year. So we'll see how this pans out. I'll be keeping my eye on the news again to see if we get bad news, if stocks do go up, and maybe it will flip back already. And it'll only have been about 2 or 3 weeks worth of good news. But yeah, I think this could be a time where we change from focusing on inflation, as we did at the start of the year, to then focusing on the fears of recession. And maybe while we're looking at these indices, we should probably take a look at the daily S&P chart here. I mean, the recession fears are clear. Since we talked about this option expiry on the Friday a couple of weeks ago, we've had 2 updates, right? Yeah. Literally in 10, 11 now trading days. So it's just been an absolute bloodbath. And if you look at, where liquidity lies, well, there's a few kind of equal lows around here. Maybe some retail stops could be hunted. Decent gap as well from this Monday to Tuesday in mid-September, which might also be targeted. But this has undone the whole Trump move, right? This is the Trump election day. This is anticipation of it. This is the confirmation. Wow, it's unreal that we've managed to do that.
Reversed everything. All of Trump's gains. So we've got to be careful trading these assets at this point. But I do see gap fills. I do see us go lower.
Sure.
And I do see a bunch of things. I think, Chris, it's important for folks to understand bonds and yields and debt.
This week especially.
Especially when these sorts of weeks. So could you comment a little bit about the sort of German bonds and sort of the other assets?
Yeah, so Germany's been an economy that is famed for being fiscally conservative, right? I mean, if you think about the whole European debt crisis, the view was we're not going to spend our way out of trouble. We need to do austerity. You need to balance the books, start generating some tax revenue, and start bloody spending Greece. This was the message back in the day from Germany to anyone, Greece, Italy, Spain to a degree, to just dial it in, please. So, and Germany, fair play to them. They always kept their reins on it as well. But Mario Draghi, the former ECB chief, also former prime minister of Italy, or president, I don't know which one it is these days, he has kind of put together a proposal that, listen, Europe, you had an economy that was bigger than the United States, right? 20 years ago. Now, the United States is 50% greater than the European economy. How have you let this happen? And if you want to think about this practically, the problems that lie within Europe are there is really no expansion. There's no growth. There's less opportunity than there is in the land of opportunity, right? But this is kind of a really good way of looking at this. I think it takes about 6 or 7 weeks to set up a business in France. I think on average it takes about 12 minutes to set up a business in the US. So the ability for you to be able to kind of make things happen in America is just way, way, way easier. Click a button, basically. Yeah, it's dead easy. So that's the kind of the setup here. Europe needed to do something. It's been told by very smart people it needs to do something. It's just never done anything until this week. So Germany, of all of them, decided to have a big whack on fiscal spending. They don't spend more money than they have. Yet, this is what they're now doing. And on Tuesday, we were doing a Zoom around this. This literally dropped right before we do live calls each day for our customers and clients. So if you want to kind of come on and get on this live, you can. We were talking about this around the open live on Tuesday, that this announcement had been made. And if you were buying into any kind of levels around here, then you've done fairly well. The yields, I've just rallied, so you'd be shorting bonds on this. But just to kind of look at how the yields work, we saw a huge appreciation. If I can get a measuring tool in here, see how big we are. This one. Okay, so if we see how big a move we're talking about, we're looking at about 17, where are we? Nearly 18.5% move in the yields in the week. Or that was into Thursday, I believe. So why did this happen? So when fiscal spending occurs, this means that the government is going to spend money, quite frankly, it does not have. So where's it going to get this money from? It's going to get this money from investors. These investors look at Germany and say these spending plans are unfunded. You are not generating the tax revenue in order to pay for this. So you want me to lend you money for this? Well, you're going to have to pay me a bucket load more money than you're currently paying. Thank you very much, Germany. And this is how yields get reflected in this manner, seeing such an appreciation in such a sharp space of time. And this, for a lot of people, people talk about bonds and they get they start to snooze, right? It's not been a market people have traded too much over the past 15 years. Over the past 2 or 3 years, they're back to life, right? I think the next 10 years will be a great period for bond traders. You might hear a lot about bond traders in the next decade. But even if you're a currency trader, this is important. Why? Because if we have a look at the euro against the US dollar, I would say the single best indicator on how strong a currency is going to be relative to another currency is bond yields, or ideally like the change in bond yields between two assets. But look at this, the euro against the dollar. Again, if you just bought this at 2 o'clock, which I did on this day, you could see a huge appreciation. And the correlations, they're not perfect, but they're not imperfect. They're pretty damn tight. So if you are trading currencies, you need to be aware of this, because the euro has effectively gone on from 104s, 105s, all the way up to where we reside now. Just shy of 109s this week. So the biggest move in the euro I think we've seen in its history in a week. Pretty meaningful action from Germany. Very unusual, you would say unexpected. 2 years ago, it has been simmering away that it might happen. But this leads to real market moves, not just in the bonds, but also in things like the DAX, which again has had its best day on the upside on Monday since 2022. Then its biggest down day since 2022 the next day. And then actually from close to open, it was its biggest up day since 2022 once again on Wednesday. So if you like volatility, Europe is the place to be at the moment. You're getting that in the currency pairs, you're going to get that in the bonds, and you're going to get that in the indices. Huge ranges at the moment. If you like volatility, have a look there. If you don't, please stay away.
So we have to always understand the style of trading we sort of take as traders.
Mm-hmm.
Some of us sort of are attracted to volatility, like myself. And you see me go crazy on the trading floor when things like news come out. I trade the range from there. And some people like to be more relaxed in the trade. So when it comes to news events, we sort of advise traders to stay away from the computers.
Mm-hmm.
But that's the kind of advice that we can kind of give to our upcoming traders as well. Whoever's looking to catch these kind of moves.
It depends who you are, right? Some people like volatility, right? So if you do, then trading news events is a great thing for you to try and tame. It's not easy. You probably need to use wide stops and have very specific criteria around your entries. But if that sort of thing, turns your stomach, that does not mean you can't be a trader, right? You can trade in low volatility environments and just do something different, right? Looking for, divergences or little trap traders in rangy markets. These things make money too. Granted, you're not going to probably make as much money in a day as someone who trades volatility, but you might be more consistent. So you've got to try and see what suits your personality. And we can teach these concepts. We will, if you come on with us, teach both of these styles of concepts along with many others. Hopefully we can cover what suits yourself and your own risk tolerance.
Absolutely. I think for the week we've kind of covered all the main points. We've covered crypto and the big moves that sort of Bitcoin and Ethereum and Solana could make. And I'll have my eyes. I won't be sleeping this weekend, Chris. I will be in front of my computer.
Don't know how you do it.
I don't know how I do it either. I'll have a bunch of coffee. My wife will be asking what time I'm going to sleep, which is not till Sunday afternoon. So it's going to be a busy weekend for me. We got the Crypto Summit coming in. We have all the big sort of hitters. We got, CZ, Vitalik Buterin, Hoskinson, all the sort of founders of DeFi entering the White House. So I want to see how that sort of builds up. So I'm going to have a sleepless weekend trading, leveraging, and also memeing my way into the weekend. So that's going to be my weekend. But we've also covered the main perspectives of bonds, understanding the importance of bonds. We've covered unemployment claims, we've covered non-farm payroll, and how to trade such volatility. I think that covers it for today. I think it's been a great Friday to start it. Is there anything else you want to add, or have we covered?
No, I think just looking forward to next week. We've got CPI on Wednesday in a Trump world. I know when we had Jonathan on last week, he was telling us that a lot of price pressure has already come in the US. A lot of these companies have already put up prices in anticipation of tariffs. 1 minute there are tariffs, 1 minute there aren't. But they've already made their moves, and we may well see this reflected in the CPI figures that come out on Wednesday this coming. Just be aware as well, for those trading in Europe, or certainly in the UK, the clocks change in America, right? Mm-hmm. So the data that you're used to seeing at 1:30 is now at 12:30. The opens that are usually at 2:30 next week and for the week after will be at 1:30. So this confuses the hell out of most people, I have to say, in the office. And you just about get the hang of it, and then it switches back. So when we change our clocks in a couple of weeks' time, we'll be back to normal. But there's this couple of weeks this time of year, and then another week in the autumn where this happens. But yeah, this time the CPI numbers are coming in at 12:30. Your calendars are not lying to you. This is what is happening. So yeah, be aware of that. Don't sleep through the opens or through the news, please. A few people will definitely roll in late at some stage this week coming, I'm sure.
So it's going to be a crazy week. We got CPI numbers on Wednesday. And then we have, you can say on Thursday, we have sort of purchasing PPI numbers coming out and unemployment claims on Thursday. So maybe a slow week heading into Wednesday and Thursday, and then we see a bunch of volatility.
Yeah, the Monday after non-farm payrolls is typically the quietest day in terms of data. So if you want to go play golf, Monday might be the day, unless you're one of those ones who doesn't like heavy volatility, in which case strap yourself to your desk because it's your money day.
It's going to be a great week. So much to look forward to, Chris.
Excellent. Let's be back next week and see how it went. But thank you for joining us. I've been Chris Pollock.
And this will be Zee with the crypto. Thank you, guys.
All right. Have a lovely weekend. See you later.